Hey everyone, welcome. This video is recorded partially on the 9th and on the 10th, providing some market analysis for everyone, not just insiders. It's going to be made free and public to everybody. Not only market analysis, some trade ideas and analysis, and I thought it's best to just get started here. So first thing I want to do is take a look at the overall market structure and discuss a few things that you're perhaps not hearing in the mainstream view. And as many of you know, I was very aggressive when the markets pulled back. I informed private clients, of course, within our equity group, and also to insiders, which is a public-private group, that I would be a strong buyer on the dip, and I noted that around the very bottom of the market as well. But it was more to the fact that the markets have pulled back far too much because, of course, my view was that tariffs were a negotiation tool and the markets were overreacting as though this would be a blanket situation with no negotiation. I thought that was ridiculous. And of course, that's been extremely fruitful. But again, we actually got aggressive here. You can see there's a pattern here. I always say, don't rely fully on patterns. They're lines on a page, right? They should inform a little bit from a technical view. All it is, it's helping put into view what you see on charts and price action. Don't get obsessed with that. The people who obsessed over only that and take nothing else into account typically don't understand the other factors in the market, which are critical, right? There was no technical element that prevented the markets from pulling down the way that they did here. Nothing technical could have predicted that or understood that because it was a fundamental issue. You could understand it fundamentally and say the markets are panicking, they're still on the way down. And then to rebound, you could have said the markets were oversold 1,000,001 times, and it had nothing to do with RSI or feeling oversold from a technical standpoint. It was understanding fundamentally that tariffs were not what they were being marketed as. The markets made a mistake in the analysis. President Trump, whether you like him or not, this isn't a political course, nor do I ever care to share my politics with anyone or tell people how to think or act politically. But it was a misunderstanding. Of course, the president decided that tariffs are negotiable. He started to move dates. There was a delay, fluctuates on how much he's applying tariffs to different countries, etc. And then we also got aggressive again here. We felt that this was a breakout to push to the upside. So that's the overall market view that I'm sure many of you know. I wanted to bring up a couple other things that I think are being overlooked. And I don't like to look too far back and talk about COVID and go all the way back into the 1920s or anything like that. But I think that the markets have shown a great deal of resiliency because they've been tested. And what they've started to understand when it comes to this administration and to the market structures, a couple things. One, this administration cares about the markets and wants to see them performing well. You see that all the time. The president or members of the administration talking about the stock markets, overreacting, feeling poorly when it goes down and celebrating when it goes up. They're very, very in tune with the markets. But not only that, the markets have learned through exposure to a couple things here. And one of the first ones is tariffs. There was a tariff panic. The markets have begun to learn not to overreact because it's a very dynamic administration. And so we had tariff panic, and that caused the meltdown, and the markets were resilient. But we also had an event that could have become a black swan event. I think it is very mistaken. I hear other analysts saying that the U.S.-Iran conflict was a black swan event. Nonsense. That's ridiculous. It was a single strike in and out, of course, and that's what calmed the markets. It's not that we survived a black swan event. I think that's something sensational you hear in the news, but a black swan event is something that is unforeseen and devastating to the markets. You could say the conflict is unforeseen, but it had a cap on it. So if we were looking at a regime change or a prolonged war, boots on the ground, much more capital being diverted towards military funding, lives lost, the markets would have a very different reaction. However, both items are ones where I think the market's built some resiliency. And you could see that hedge funds have continued to build short positions after short positions, but hedge funds have been lit on fire by the markets and absolutely burned on this. And I think that's a lot of hedge fund managers, and I have friends who are hedge fund managers. I have friends who work in the capital markets, and I have agreements and disagreements with some. Some of the people I think just doubling, tripling, quadrupling down are really just fighting for their jobs because they've been so wrong. So I wanted to talk about those elements and then a couple other quick ones. If you actually look at what the public is saying, inflation is doing well. The public's been positive recently. You see inflation expectations have come down a great deal, and you can see this little spike here, blue, looking forward 1 year. That's when the market started to feel that maybe tariffs were going to have an impact and bite, and they've really come down. And if you look at the most recent report from the New York Fed survey of consumer expectations, median inflation expectations have decreased. Year-ahead expectations for household financial situations have improved. Probability of losing one job in the next 12 months decreased. Expectations for future credit availability also improved. So people think there's going to be less inflation. They're more bullish about their household finances. They're less worried about losing their jobs, and they feel that they'll have more access to capital. That reads ahead really well. I've been telling insiders this, and this is just for everybody to look forward before we get into some trade analysis and ideas. Look forward. Next week's CPI print is critical. If it comes in cool, Chair Powell and the Fed are in a very hot seat. Chair Powell is no longer safe, as it were. He's got a lot of pressure on him. What he's working towards right now is managing his reputation. He wants to try to salvage his legacy, because regardless of your politics, he has committed one of the biggest blunders, along with the Fed, the greatest acts of incompetence in modern monetary policy history, and that is with the transitory inflation. So forget what the president is saying about the current circumstances. You can't get away from saying inflation was transitory and then embarking on the largest rate hike cycle in 40 years, whereas the day before, months before, you were saying we're not thinking about raising rates. And the reason raising rates, and the reason that I say he's in the hot seat is you've seen him get uncomfortable, begin to doublespeak. And this is something that I showed to clients and insiders the past couple of weeks. And what does that mean? Is that political talk? Oh, no, it's not. We are objective and data driven. I don't care for the politics of left or right or red, team blue. Here's what we saw in the very same conference minutes apart. Chair Powell said we've had months of favorable readings. He said, welcome news. Okay. And then he said, everyone I know is forecasting a meaningful increase in inflation in the coming months from tariffs. Someone has to pay. So he said, we are looking forward at forecasting into the future, and it is definitive. Everybody's on the same page. Someone has to pay, right? 2 minutes later, he got pushed on that, and he changed his tune dramatically. And ultimately, he said, well, there's an argument in favoring cuts immediately. Inflation is cool. It's back to roughly 2%, was his question. And he got really confused and muddled in his response. And ultimately, he concluded, he said the likely case is no one holds these rate paths with a great deal of conviction, and everyone would agree that we're all going to be data dependent. This was Chair Powell. He goes from 2 minutes before saying we are forecasting a meaningful increase in inflation in months to come. Everyone's on the same page. Someone has to pay. He gets pressed on it, and it becomes, well, no one really knows. And you just went from everyone knows and everyone is projecting forward to no one really knows with a great deal of conviction. And I think we'll be data dependent. So which one is it? Everyone knows and is on the same page and we're forecasting forward, or no one knows and we're data dependent? These are opposites. You're either forecasting or you're waiting for the data to come in. You're looking ahead or you're looking back once the data comes in. It's either everybody's unanimously and it's ubiquitously held that we're on a certain path, or no one has a great deal of conviction and no one really knows, right? So this was doublespeak, and whether you like the chairman or not, he's typically far better speaker than that. That was blatant. That tells me that he's rattled. He's not sure what to do right now. He knows that his legacy right now will be, team transitory, and they're less worried about doing the right thing, and more worried about doing the wrong thing, right? So I don't think it's necessarily all the political elements and whatnot. They're so worried about doing the wrong thing again. And I think there may be some other elements in there as well, but that in and of itself is causing this incompetence that you see. So I think that he's running out of steam, and the Fed would be praying for a hotter print to come in, because then they could say, we're sitting on our hands because, we had a lot of really good reports, but this one went kind of bad, so we have to wait and see because we're not sure, and inflation looks like it's coming back. You could build that story. If another one compounds and he's in this cornered situation and you see all the surveys and everything's pointing in the same direction, his legacy starts to take a hit again, because now you feel like Mr. Too Late. So that's on the Fed front, and that's on the overall macro view of the markets. I also said yesterday at close, I know I was supposed to start this video yesterday, but my view to insiders was we were going to arrive by today with a close somewhere between 62.75 and 63.50. That's where I think that will be before the CPI print. That's just a couple days away. And I want to get on to a few trade ideas. One of them that we had yesterday for everyone was on MicroStrategy. I know this was a popular one. I posted about it a little bit. I said that we were going to resolve to the upside, right? Resolve to the upside. We got the breakout hit and continue breaking out. So put that as a trade idea. I said it was a bullish setup going into yesterday. We're still bullish. I communicated that within Insider Access. Bullish on MicroStrategy. And obviously, it wasn't just the breakthrough on what you see. Again, lines on a page. Don't get obsessed over that. Understand the fundamental story. Then combine it with the technical look at the news, look at options flow, look at all the data out there, put it together, build your thesis. Don't be a zealot to one thing or another. That won't serve you well. But again, here we are, moving from about 394 to about 427 here, and the aftermarket surging. Of course, Bitcoin's doing extremely well. And just for everyone to know, I'm going to leave a short note here. I've been calling this Within Insider Access for quite some time. We were buyers of Bitcoin and was putting into the Insider Access group, down at 27,500. And that was just in the Insider Access group on Discord. Prior to that, 15,000, 18,000. These were buy zones, buy zones, buy zones, all the way up. We had lines sort of running on this page. You can see that we call this as another breakout, an opportunity for people to add. Recently, I called for Bitcoin again at 90,000, again at 92,000. And my view is that we're going to break 125. We'll reach that zone by fall. And then obviously now we're well on that trajectory here. A couple of days ago, you might have felt like we were a little bit far away because I would have constituted 25%. But we've been bullish on Bitcoin and for quite some time, remain bullish. Let me talk about a few other trades other than the MicroStrategy one that I posted the other day. And you can just take a look here and we'll share a little bit from Insider Access. And this is directly from our active trade section. And obviously we explain the nomenclature would make it easy. Just as a side note here, my team helps me. I do have help in preparing some of the slides for private in both the Insider Access program and also private on the equity side. And I always note it's a rule to sort of redact or blur out or remove any personally identifiable information. We were having a laugh yesterday in the Insider Access briefing. I said, I don't know why the reactions got blurred out by my team. But yeah, gave me a few laughs. There's nothing personally identifiable. These are just emojis. You could see their hearts and little prayer hands and more hearts and such and so on and so forth. But yeah, if you want to look at some of our ideas. So we post the night before for the next day's action. I'll have that ready just the way that I do on X. Do the same thing for everybody publicly. You saw Apple on the 6th. That meant on the 7th. This is what we're expecting because this came at 9:48 p.m. on the 6th. We're looking for rejection, 214.70. We're looking for Meta to be bullish and rejection at HIMS at 51. You could look these up and see if they triggered. I'll even pull up just a few. So we said 214.70 rejection on Apple and Meta bullish for the 7th. And I could pull that up here. You can see that actually hit almost perfectly here. 214.70. We got a spike above early in the morning. Again, idea was came in on the evening of the 6th for the 7th. Got that rejection 214.70 and crushed down for an absolutely enormous move on Apple. For Apple to make that kind of move in a day, to go from 214.70 bottom out at 208, that's a really big move. That's a big range for Apple. That's higher volatility than you usually see. That was a big trade idea. It went for a few hundred percentage points on the ROI. And that same day on the 7th, we were bullish on Meta. And you can look back to the 7th. I think this is the 7th. Yeah, this is the 7th. And you can see Meta gave us that big bullish move, pulled back and later on in the day, but it already made a huge move on the day. This is all unadulterated. This isn't just cherry picking. HIMS didn't actually trigger. You can look 51, so there was no trade to be had. If I say bullish, it just means bullish on the day. We're looking for upside. Rejection at a specific level. I write the level. Just like I say, Walmart resistance at 101, and this was for the 8th. And Walmart didn't hit 101. And we said resistance rejection for 1985 on DJT, and SMCI bullish on the day with support of 4620. So on the, let's see here, that was on the 8th. Just to review a few of these, to give everybody an idea of how we operate. I know there's a lot of curiosity and you see posts from it. Walmart on the 8th. This is the 8th. You can see the date up here. We never hit 101, so that trade wouldn't have triggered. But DJT was resistance at 1985 on the 8th, right? And perfect rejection down, similar to Apple. You could see that wasn't pre-market. Got the spike up earlier in the first few minutes, and then hard rejection down. So that was a great trade idea. That was a winning trade idea. I won't go through all these here, but SMCI on the 8th was obviously a big winner. This was the 8th. It was a bullish on the day. So big win there. And then yesterday, you could see a lot of people posting. We were bullish on a breakout from Hood. That's Robinhood. We're bullish on MU to make a move. Apple, MicroStrategy. And that's actually, we updated that. It was 392.65, but we were bullish on the day. And a lot of those names doing really well. I can pull up here. Again, I wanted to put that screenshot up. That way you could see it directly at a Discord if you wanted to take a look at it. And there's Robinhood hitting that 92.25 breakout zone, hitting a big breakout, absolutely surging today. And then obviously we went through MicroStrategy and a few others. And those curious about the Insider Algo Trader, you see a lot about the algorithm. It's straightforward. It's an algorithm that runs during the day. This move looks a lot smaller than it is, but this was yesterday's move. We got a move to the downside here. Sorry, this was Yeah, this is on the 9th. You can see the date here. We're going to move to the downside, caught it. The way that it works, it's a live stream. Sometimes the signal will fail. They'll come in and out. We'll wait. It's not always perfect 100%, but we do really, really well with it. Got a signal to the downside, trade, got the move down. And then today, this would be the 10th, actually very similar look. Again, caught the move coming down and then move spiked to the downside. I think that was the biggest, cleanest move of the day. You can see that we got some movement back up, but it was a little bit of up and down, a little bit of chop going up and down. We just got that clean move to the downside. So that's how the day trader works. That's how the QQQ trader works. We also have this for the SPY. We do QQQ, S&P 500. You see the algo trader right there. And tonight's trade idea is going to be on Apple. So keep a watch out. I'm going to have that posted on X shortly. If you don't know how to read my trade ideas, please make sure to watch the videos effectively. It's really simple. It's very similar to what I do here because this is modeled after X. Only insiders understand the protocol. It just means I'm going to put where there's support. I'm going to put where there's resistance. And if it's specifically only support or resistance, I'll note that. And if it's just a bullish setup, that means you'll get bull action to the day, upside action or downside. I'll note that as well, right? Okay, guys, hopefully that was helpful. What you're looking forward for is the S&P 500 has been resilient. The markets are strong. This is not the top of the markets for the year. There still remains upside between now and the end of the year. Keep a close eye on CPI next week. Chair Powell is he's in a hot spot. I think that's the bigger story. I don't think there's going to be a rate cut, but I think if we see a cooler CPI print, you're going to see rate cut probabilities spike. They're about 5-6% right now. I think you'll get up to about 20. It's a live meeting. But again, it's more about the pressure that will build because then that'll inform what's happening in the future. And I'll keep posting more trade ideas. Tried to make this quick. Hopefully that was informative to everybody. It's what you're not necessarily hearing in the mainstream. We've been multiple steps ahead of the vast majority of analysts and experts and cohorts out there. And again, a lot of these are my colleagues. I don't criticize anybody. I don't name anyone specifically. That is absolutely not my style. But we will keep putting out what we believe is some of the best work in the world. All right, guys, have a great night.